Wall Street trembles, Main Street cheers, the first US Bitcoin ETFs are here. But beyond the celebratory champagne, what ripples will this historic event send through the global economic landscape? Will Bitcoin become the next Wall Street darling, or a volatile disruptor shaking the very foundations of traditional finance? Join us as we explore the potential revolution unleashed by Bitcoin ETFs. But before that, we'd like you to subscribe to the channel for more updates. Any analysis of the impact of ETFs on the global economy would be incomplete without explaining what Bitcoin ETFs are. An exchange-traded fund, also known as an ETF, is a type of investment vehicle designed to mirror the performance of an underlying asset, which can include stocks, a collection of currencies, a precious metal such as gold, or, as in this instance, Bitcoin. So instead of owning, let's say, a bunch of Bitcoin directly, you can invest in an ETF that mirrors its value movement. It's like riding the Bitcoin wave without actually owning any Bitcoin yourself. ETFs are traded on conventional stock exchanges, and their value typically corresponds to the fluctuations in the price of the underlying asset, rising when the asset's value increases and falling when it decreases. So now that you know what ETFs are, let's get to what happened at the start of this year that's shaking the global financial markets. In January 2024, the U.S. Securities and Exchange Commission approved the first ever batch of spot Bitcoin ETFs from the U.S. This green light from the regulatory agency paved the way for sponsors of 10 ETFs, including well-known names like Blackrock, Invesco, Fidelity, Grayscale, and ARK Invest, to start trading these funds. This approval signifies a significant advancement for the cryptocurrency sector, offering investors additional avenues to gain exposure to Bitcoin. Now they can do so not just by holding the cryptocurrency directly, but also through established financial instruments traded on regulated stock exchanges. But let's discuss in a more in-depth manner what it means for investors. You see, a Bitcoin ETF makes it easier for both individuals and institutions, even those with limited cryptocurrency trading experience, to buy and sell Bitcoin. This ETF has two main impacts. It broadens Bitcoin's reach in the US market, although similar ETFs have existed elsewhere for years, and enhances the credibility of cryptocurrency as a legitimate investment category. Now that there's a US-based Bitcoin ETF, Bitcoin is no longer seen as dubious or disreputable. This shift in perception is significant for the general public, potentially leading to more inclusion of Bitcoin in mainstream investment portfolios, including those of retail investors, institutional fund managers, and retirement planners offering 401k plans. With the availability of a Bitcoin ETF, investors no longer need to worry about storing their Bitcoin on vulnerable hardware wallets or understanding the complexities of hot and cold storage solutions. Instead, they can simply purchase the ETF from reputable asset managers operating under regulatory oversight. Analysts know that the approval of a Bitcoin ETF carries immense implications for US investors. They can now hold cryptocurrency in their brokerage accounts, which wasn't possible previously. Additionally, the ETF approval serves as a credible endorsement for large institutions and market participants seeking an easier and safer route to access the cryptocurrency asset class, mitigating the inherent risks associated with purchasing crypto directly. But some say that this Bitcoin ETF might shake the very foundations on which our global economy is standing. There are repeated calls that increased investment in Bitcoin could potentially affect traditional asset classes like gold and bonds, impacting their prices and volatility. Additionally, Bitcoin's decentralization and limited supply could challenge the dominance of central banks and traditional financial institutions. Therefore, some analysts believe Bitcoin could erode gold's demand as a store of value. For instance, in 2021, when Bitcoin's price skyrocketed, the price of gold saw a notable decline. While correlation doesn't equal causation, it highlights a potential relationship. As Bitcoin's inflation resistance becomes more recognized, investors might flock to it, impacting bond demand. Imagine a scenario where central banks struggle to raise interest rates due to reduced bond demand, impacting government borrowing costs and potentially even sovereign debt levels. China's recent restrictions on cryptocurrency transactions and mining illustrate how central banks might react to Bitcoin's growing influence. Imagine similar actions by other major economies, leading to a global regulatory patchwork and potential fragmentation of the financial system. These are just hypothetical scenarios, but it goes to show how Bitcoin ETFs are changing our global economic order. On top of that, if Bitcoin becomes a widely adopted store of value or medium of exchange, it could influence global trade and capital flows. This could have an impact on exchange rates, inflation, and overall economic stability, requiring adjustments from governments and financial institutions. For instance, with hyperinflation and currency controls, Venezuelans already use Bitcoin for remittances and international trade. Widespread adoption could see more countries like Venezuela bypassing traditional trade channels and currencies. Take, for instance, the ongoing Russia-Ukraine conflict. According to reliable sources, Russia is reportedly contemplating the acceptance of Bitcoin for its oil and gas transactions. This decision is seen as a measure to bolster the Russian currency, which has experienced a significant devaluation of over 20% this year. The sanctions imposed by the UK, US, and the European Union in response to the invasion of Ukraine have added pressure on the Russian ruble and elevated living costs. This example underscores how emerging digital currencies like Bitcoin are reshaping e-commerce and even influencing strategies to circumvent restrictions. As with any new technology, the impact of Bitcoin ETFs remains uncertain. Unforeseen consequences and potential risks such as volatility, technological vulnerabilities, and regulatory changes could also play a role in shaping the global economic landscape. For example, in 2022, the Mt. Gox hack resulted in the loss of thousands of Bitcoins, impacting market confidence and raising concerns about exchange security. While Bitcoin ETFs offer easier access to the cryptocurrency, their environmental impact and broader economic consequences remain murky. Mining Bitcoin requires vast amounts of energy, raising concerns about its sustainability and potential contribution to climate change. The approval of Bitcoin ETFs also signifies a crucial step towards mainstream acceptance and regulatory clarity for cryptocurrencies. This could pave the way for further innovation and development in the crypto space, attracting more businesses and individuals to participate. In Canada, the first North American Bitcoin ETF attracted over $1 billion in assets under management within its first month, largely from institutional investors. This trend is expected to continue in other countries with approved ETFs, potentially boosting the crypto market's overall stability and liquidity. Increased mainstream acceptance also attracts established businesses to explore crypto-related services and products. For example, Visa and MasterCard have partnered with crypto firms to facilitate payments, while tech giants like Microsoft and Amazon are exploring blockchain technologies. But with the good comes the bad side, and sometimes the dark side. And there is a dark side to the Bitcoin ETF. As Bitcoin ETFs gain popularity, they could become a more attractive target for hackers due to the potentially large sums of money involved. Hacking exchanges or individual ETF accounts could lead to significant financial losses. Consider the recent rise in SIM swapping attacks where hackers gain access to accounts through phone number hijacking. While not inherently illegal, Bitcoin's pseudonymous nature can make it appealing for illegal activities. Easier access through ETFs could potentially increase their use in illegal transactions like money laundering, drug trafficking, and cybercrime. For instance, darknet marketplaces like Silk Road have used Bitcoin for illegal transactions. Furthermore, money laundering involves disguising the origin of illegally obtained funds. Bitcoin ETFs could provide a new avenue for criminals to launder money by converting it into seemingly legitimate investments. Large inflows of capital due to ETFs could create opportunities for market manipulation, where individuals or groups try to artificially inflate or deflate Bitcoin's price for personal gain. This could harm investors and disrupt the entire cryptocurrency market. It should also be kept in mind that the regulatory landscape surrounding cryptocurrencies is still evolving, and Bitcoin ETFs could face challenges or restrictions in certain jurisdictions. This uncertainty could dampen institutional adoption and create opportunities for exploitation in unregulated markets. So we need to charter this uncharted territory with caution and adopt certain measures. Clear and comprehensive regulations can address money laundering, market manipulation, and investor protection concerns. For example, the European Union's Markets and Crypto Assets Regulation aims to establish a harmonized framework for crypto assets, including ETFs. Implementing robust cybersecurity measures at exchanges, ETF providers, and individual investor accounts is also crucial to prevent hacking and fraudulent activity. Case studies like the Gemini Security Program, which involves bug bounties and penetration testing, showcase proactive approaches. Bitcoin ETFs offer potential benefits, but significant risks and uncertainties remain. Responsible implementation, strong regulations, and investor education are key. But that's it for today's video. If you enjoyed it, don't forget to hit that like button and subscribe to the channel. And if you want more economic insights, click on our video about why America is entering a horrific financial crisis.